So obviously, Tim, we see what's going on, and we like to have a good time, but obviously the events of the last few hours suggest otherwise. And I
Yeah.
think we have to be respectful of that. I mean, but we try to look at things on the show through the context of the market. And if you had told me last night what was going to transpire over the last 3 hours, and you said, "Where's the market going to be?" incorrectly, as usual for me, I would have said, Dow's, given the run, it's going to be down anywhere from 750 to 1,000 points. The S&P is probably down 85 to 100 handles, and the VIX is either side of 30. And
Right.
it looks on the close, we're probably up. Dow's up 400 points or so, which I think, in my opinion, speaks to what I've tried to point out, again incorrectly, is just the absurdity of this stock market.
Well, look, man, think about what we've been through in 14 plus years on the show, and the moments that we've seen in history as they relate to markets and obviously broader geopolitics. And this is a moment that we never thought we'd see, and this is a moment where the reaction of the market itself is something that once again is kind of an unponderable. And if you think about the political cycle that may be about to complete, and you think about election night of 2016 too. I mean, the markets don't always respond at first the way you think that they might. Just some stats from today, which is that I think this, at least the news flow. I don't really know when the Capitol was formally breached, but around 2:30, the market in the form of the VIX, so the measure of volatility, started to move higher, and I think spiked about 16% into the close, and yet the industrial average, which was setting highs for the day, and I choose the Dow, which we often don't, but the Dow, which was getting a particular lift from some of the dynamics that took place overnight in the Senate race, was down about 50 basis points. So a 16% move in the VIX, and you only get a little sell-off at the end of the day, which you could have probably seen anyway. So I can't believe markets have priced anything in here, and if you think about risk and you're a global investor and you're an investor outside of this country, one of the reasons why the institutions in the capital markets in the United States are the deepest and the most grounded and efficient in the world is because there's confidence in the systems and from Washington all the way through. I think obviously we're watching. There's so much information we don't have. We're giving the market participants view of things, and we're citizens, and we're fathers, and husbands, and all those other things. So we have those views. But I think right now, from a market's perspective, when we're at all-time highs, we haven't really responded to this, and I think. Don't want to preach doom and gloom either. I mean, ultimately, there's a lot of different ways this can come out. So sorry for being long-winded. I don't know what to say.
No, it's not a lot to say. It's fascinating, I think. And again, we if anything, wrong often, but honest always. And I'll say again, if you had told me 24 hours ago what was going to take place, and you said, here's your window into the next 24 hours, bet on the market, I would have lost everything. Because, to me, given the run we've had and given everything we've seen, it would have been logical. The market, to me, was looking for an opportunity to sell off. If this isn't it, I'm not sure what is. But to your point, maybe we're early in this cycle and maybe it needs to digest. I have no idea, but it's just fascinating to me, yet once again, how this market is impervious. And to me, again, before we get out of here, I put it at the feet of central banks globally and our Federal Reserve here, because they've just pumped all this liquidity in the system, and they've created this situation.
Created a sense, and we talk about financial oppression, which could be part of what's playing out in Washington, but a sense that there's always a put onto the market. And I think that's really the part here that's concerning. And the part that is tough to really gauge, because the sense will be that the Federal Reserve will act in a role that they're really not supposed to. But that has been a put for these markets. Look, we've seen, again, we've gone through almost every imaginable event on Fast Money where we've been in the middle of a show where we've had to respond on the fly. And this is another one that we're going to be doing this on. And it's with a serious and a steady focus. I think the one thing that, advice to investors is, and one thing that we'll try to do on Fast Money tonight and tomorrow night, but what we try to do every night, and this backs to what you said, is like, look, you're being somewhat self-effacing, that, you haven't always called it right. Being consistent and showing up every night and laying out a framework is really all we can do. And that's, markets do the rest. Being able to sleep at night on your portfolio and have high conviction, at least, of companies that you own through good times and bad, is ultimately where you come down to at moments like this. And so there may be some folks that feel a little bit too over their skis. Be careful about selling some of the best companies in your portfolio, because they're the ones that are being the most defensive tomorrow if we do have a down day. And I have no forecast on that right now, but show some caution.
Yeah, nor do I. But I mean, again, that's why it's the markets are humbling always, and that's why we try. Again, we don't pretend we know what's going to happen. We just try to give you the framework for why we think things may or may not happen. Anyway, Tim, we got to get going for Fast Money, but we'll definitely, hopefully, we'll have a little more fun tomorrow, and hopefully the environment allows us to have a little more fun tomorrow. We'll see what happens.
No, we're going to stay focused tonight.
All right, Tim.
See you.